Hey everybody, what's up? What's up? Welcome into today's session. So in today's session, what we're going to go over are the pairs, how the market has opened, and how we should be looking at them as the week proceeds, right? So cool. We're going to start with gold. Obviously, this is the trade that we're still having that's running over 100 pips now. I just finished the session, by the way, with the people in the free Telegram group. If you're not in it, man, you have to join. Like, the link is just below in the description. We always have sessions, live sessions during the New York session. So yeah. Now cool. So with gold, what you just noticed, we actually noticed this in the session. So we have a structure that's broken here. I didn't see it there before. I was actually focusing on this kind of structure down here, but prices just broke above that structure in the past 4 hours, closed with a doji after tapping that, indicating that there's a lack of momentum. So we should be seeing, or we should be anticipating to see prices push higher from there. And if it presents itself with a beautiful trading opportunity, at least 1:3, then we all in. You know the vibes. So that's what we're anticipating on gold. Now let's look at the big two. The big two, JPYX and DXY. The big two. That's what I'll be calling them from now on, the big two. Alright, cool. So the past 4 hours, you can see the JPYX closed with a bullish engulfing candlestick. Let's zoom out. Also, you can see like it broke above this trend line. So this is kind of a continuation in what we were anticipating from last week, because obviously last week, this is how it closed with a doji after tapping the 0.5 Fibonacci key level. So we should be anticipating to see prices go higher. So that 4 hour just confirms our bias. But however, for entries, we'll have to slow down a roll and look for it from the 1 hour perspective. We need to see prices break above here, take a retest before we actually confirm that yeah, this is legit, right? That's the way I just said that yeah has reminded me of that Burna Boy song. You know that? Yeah. I'm not a great singer. Alright, cool. So we got DXY, ladies and gentlemen. With DXY, we have that from the daily perspective. On Friday, prices closed, but not that strong bearish momentum, as it didn't engulf the previous candle, right? But it's a solid momentum. Now we take it a notch. If we take it down a notch, we can see on the 4 hours the structure or the trend was actually started. It has been created to be bearish, because we had that as a high and this as a low. Prices created a lower high and a lower low, and then came back to the same high, so not creating another high, and then after that just broke below this ascending trend line. So from here, we should be anticipating to see some kind of a continuation in this bearish rally. We should be anticipating to see an extension and then a little retracement. Depending on how far it will extend, that will actually determine where it will retrace to. So if prices push and extend below this low, that's where we'll be coming to look for a retracement. And if it starts retracing before pushing low here, we'll be looking for retracements on this trend line. So yeah. USDJPY is our best bet on looking for trades on this. So should prices break below here, we'll be looking for a retest on this before we sell. And if prices get rejected off it, we'll be looking for prices to go back to that structure before we look for sales. So USDJPY on our watch list. That's a trade that we just took on USDJPY, man. Let me share with you what the hell. So we just took that sell. Obviously, it confirmed from the daily. On Friday, prices closed with a bearish engulfing candlestick. Strong bearish momentum after hitting the market structure in the 0.382 Fibonacci key level. So from here, we should be looking to see prices push lower. We also got this minor retracement on the 4 hours after the break of this structure. So it's a break. I consider this kind of a retest. So from here, I've placed my stops be above that bearish engulfing candle. In case prices don't push lower and they go back up there, once prices go above that bearish candlestick, then that's not the perfect entry, right? we'll have to accept the loss and move on. In case it keeps on pushing low, which is what I'm anticipating, it's a 1:20. So we're risking 1 to make 20. As I said, risk to reward, guys, risk to reward. Make sure that you're risking 1 to make at least 3. It's a game changer for you, man. Like for us here, we won't even be aiming for all of the 20. Like we'll start be securing partials as soon as prices reach here. This is about 1:10. We'll secure partials, and then once prices reach all the way to 20, we'll fully close the trade. So it's a game changer. Risk to reward, guys, you should focus on that. If you want me to create a video on risk to reward, explaining a bit more about it, let me know in the comments below, man. Let me know in the comments below. But other than that, so yeah, let's have a look at other pairs. We've talked about, no, we haven't. Euro USD, we're anticipating to see prices break above here, give us a retest before prices push higher all the way out there. Like the structure has already broken above this trend line. So we see that the influence of the US dollar has created this effect. So we should just be seeing prices break the structure, retest, for us to take the swing. For breakout traders, they may have already risked that trade, you know. So let's take a look at USDJPY. No, USDJPY is not a US dollar pair. We can see here on the 4 hours, prices have not yet engulfed. So yeah, I think we already talked about that. We started with gold. Yeah. So those are the pairs that we're watching based on the US dollar. With the JPYX, as I said, we'll just be waiting for prices to push higher, retest, before we take the swing highs. The trade that we're now holding, there are 2 trades that we're holding. We're holding gold that's floating at over 100 pips, looking to add more buys. So if you're also using price action, you should be focusing here to look for trades. If prices give you a bullish confirmation, take that trade, swing with it all the way until 1,870, then secure the bag. If you're trading on AUD or no, USDJPY, the trade that we're holding right now, that's still, we have reached the percentage in it. For those that will want to take entries on this, you have to look at it from lower time frames than the 1 hour, because you can see we took the trade on the 1 hour. So you need to go maybe on 30 minutes. What's going on? You need to go maybe on the 30. Here as well, we'll be looking for to go break even. So you can see the anchor candlestick is still that bearish candle. Okay, I see that. So you should be looking for continuations to take the trade. If you see another bearish candlestick that's solid, take the trade from there, and then place your stop loss above this structure here, because prices have already created this as a low, and this is a lower high. So if you take a trade, place your stops above you, right? You don't want to place all the way up there because you already be late to take the trade. So you want to take your trade and place the stop loss above the most recent swing high, right? So yeah, cool. So that's it for today, guys. If the video has been of help to you, please give us a like, subscribe, share with a few friends that you believe the video will be of help to them. Until next time, see ya.